Good morning, everybody. Welcome to the Flow Show, Tuesday, 7th of January. And the Trump trade is back. If you were following stuff yesterday, we had some fun and games with Trump and some reporting from the Washington Post. And fortunately, some good picks made by some of us in the trading room on the back of that. We'll talk about that in a moment. But you need to be ready for this for the next 4 years, maybe. We shall see. Right, let's kick off with what's going on in the news front. PBOC keeping those fixes very, very tight. 718.79, just up 3 pips from the 718.76 yesterday. And Bloomberg had a piece out just about offshore one borrowing costs. They're apparently surging over in Hong Kong. The overnight interbank rate over there rising to 8.1%. Long story short, that makes it very expensive to go short the currency, i.e. the one continuing to weaken. So that is potentially another tool they're using, keeping that overnight rate high. Just to put a bit of pressure on people who are selling the yuan. So that's keeping the currency in check. It has more in-depth connotations, obviously, being a borrowing rate. But the conclusion from that for the yuan especially, again, as I say, is that they're not letting it wander too far away from here. On the gold front, they've added 2 gold reserves for the second straight month after being a bit barren into the latter part of 2024, but they seem to be back on the buying front. Over in Japan, Finance Minister Kato is making a bit of a mess of things. He opened up with comments saying that they can't rule out the chance of Japan going back into deflation. Not comments the Bank of Japan or the PM will want to hear when they're trying to dig their way out of deflation still and get the economy moving the right way. So a bit of a negative comment there. Then he jumped around on the FX stuff going on, said won't comment directly on FX levels, but then trotted out the all same old lines, recently seeing one-sided rapid moves, important for currencies to move in a stable manner, reflecting fundamentals, yada, yada, yada. He's alarmed over FX moves, including those driven by speculators, and will take appropriate action against excessive moves. Those comments did knock dollar yen off its perch. It did finally look to be making a decent break of 158, but the verbal intervention giving that a bit of a slap down as well. We're back under, not straying too far from the level though. So I think another move back above 158 pretty quickly, and we could be off to the races once more in this pair and yen in general. Coming over to the data front, it's been CPI day around the grounds, particularly in Europe. Start off with Swiss CPI, which came in pretty much as expected, 0.6% year on year, so down a pip from last month. However, the core number was a bit more soggy, came in at 0.7%, was expected at 0.8%. Last month it was 0.9%, so it dropped 2 pips from last month as opposed to the 1 pip expected, which will put a little bit of pressure on the SNB when they get to their next quarterly monetary policy meeting. Over in France, CPI came in a little bit softer than expected. The French measure CPI came in unchanged at 1.3%, was expected to go up to 1.5%. The Eurozone measure did go up a pip, was expected to go up 2 pips. So as far as that measure goes, it's still higher CPI by a point. The German numbers yesterday, the main German numbers. Now, we got that Hess reading earlier on in the day, which was pretty strong. That number there, 2.7% from 2.0% year on year. So as I mused on the show yesterday, wouldn't be surprised if we saw the main numbers coming in much above what was expected, and that was the case. CPI came in at 2.6 versus 2.4 expected, for up from last month. The Eurozone measure HICP up 5 pips over last month, 4 over expected. So we haven't had any more regionals. They're all probably going to drop tomorrow. Not that it really matters now, because we've got the main German number anyway. And it's showing higher inflation, and that's not good news for an economy that is looking weaker and weaker. So problems there for Germany continue. Back to today, and Italy came out as well. Their CPI also unchanged, 1.3%. The Italian measure 1.4%, so went down over last month, was expected to go up. So it's a bit of a mixed bag, and that's reflected in the pan-Eurozone number, which came in as expected year on year, 2.4%, up 2 pips. Core came in unchanged as expected, 2.7%. So overall, still sticky inflation for the Eurozone. That's the main theme there. So that's likely to put a bit of pressure on further rate cut expectations for this year, as to how much more, how much further they will go on those. And on that note, we also had the latest ECB survey, although it's for November, the inflation expectations survey. It's not being added to any calendars just yet, but we get it out anyway. 1 year inflation expectations came in high at 2.6 versus 2.5 in October. 5 year expectations 2.4 versus 2.1 prior year on year. Now, CPI expectations is something that the ECB look at very closely. It's not just about what CPI is doing, it's about what consumers and firms think CPI will be doing as well, because that influences their spending behaviours and pricing behaviours, which can then become self-fulfilling in inflation itself. So we've got sticky CPI overall and stickier expectations for CPI overall as well. So not a good cocktail for the ECB, who are cutting rates. Jumping back to yesterday's data that we got out, just some PMI data, final bits and bobs. We had the Canadian S&P Global. Where is it? Is it on there? No, it's not. Okay, so the Canadian Services PMI came in at 48.2 versus 51.2 previously, so that went into contraction. The final US number, services number, that was a decent jump to 58.5 in the flash reading. That pulled back some to 56.8, so gave back a little bit there. Durable goods revisions coming in with the factory orders numbers. Factory orders round about expectations. Some had down 0.3, others had down 0.4, so it came in roughly around expectations. The durable goods number saw a bit of a stinky revision. The original number was down 0.4%. The revision came in at down 1.2%. But some big ticket items going through their defence and the like, because things like core durable goods roughly stayed unchanged in the numbers there. Fed's Cook says we can proceed more cautiously on rates. It will be appropriate to cut rates towards neutral over time. Not hearing anything too hot from some of these Fed heads in the early part of the year. They're probably waiting to see what's going to happen over the next few weeks as well. Trump in focus for that. We had a 3-year note sale last night as well, which wasn't the best, but as Mark in our chat room pointed out, they haven't been too hot recently, particularly in the latter part of 2024. So a bit of par for the course for that duration sale there. Over in Canada, PM Trudeau is stepping down. He will remain in place until a replacement comes in. He says that Parliament will be suspended until March 24th. That's why they go through the leadership selection. So he's packing his bags and on his way out. We'll have to wait and see what happens with the election, whether it does come sooner than the planned October date. Right, over to Mr. Trump and the fun and games. So the Washington Post dropped a story, apparently from sources around Trump, his aides, saying that he's readying universal tariff plans, but with a key change. And that key change is that he's got tariffs, or will be having tariffs lined up for everyone, but they will only be on critical imports. So such things as energy, defence, and the like. So that was a little bit of a washing out of the expectations that he would just nail everyone with everything to do with tariffs. So not as incendiary as previously thought, which got the market moving. We saw the dollar coming off in particularly. That got the euro up, dollar yen down and the like. So that was that move there. Because the market had been buying dollars based on the fact that he was going to hit all and sundry with these tariffs. So that wasn't as inflammatory if he was only going after critical imports. And then Mr. Trump at 2:15 yesterday decided to drop a truth bomb. And we've got it here. I will show you it. Where is it? I can find it. There we go. Let's put it on the screen for you. Right there, basically calling the Washington Post story complete bollocks. And that's all it took. Dollar yen and everything else went, dollar-wise, went rallying all the way back up again. So this is Trump trading, another example of what you're in for over the next few months. Okay, where you get stories, particularly sources piece saying he's going to do something, and then you have to wait for either confirmation or a denial from Mr. Trump. And in most cases, it's likely to be a denial type story, depending on what it is. If it's telling me he's not going to do something, then wait for a denial. If it's telling me he is going to do something, then you wait for a confirmation. Now, this is going to be difficult. And I had a conversation with someone on Twitter about it, saying that it's unfair that traders are going to have to be put through this. Well, all I can say to that is this is what the market is going to be like. Okay, we can't do anything about it. You can't do anything about it. If press want to drop stories and he wants to deny them, this is what you're going to get when it's market moving like this. So what can you do to combat that? Two things. If you're the right side of a trade, if you're the right side of this headline, you damn well take some profit, and then perhaps you lock in some trailing stops just in case it gets denied. If you're on the wrong side of a trade like that and it knocks your stop out, well, unfortunately, that's trading for you. We can't do anything about that, but you can wait for potential denial or confirmation that might send it the other way. And if you're quick enough and if you catch it quick enough, then you can jump on it. I managed to jump on it. I was very late to it, but I got in at 157.03 on the back of that denial headline, and I'm still in the position. I've chopped it up to the 157.60s. So I'm in a position. So that's one way you can try. If you're quick enough to catch a headline, then you can get in a trade. Otherwise, you really are open to these moves. So if you see profits, take some. Don't look the gift horse in the mouth. Okay. Otherwise, you just need to be careful of the assets that you're trading. If you get a headline and say it knocks you out, hits your stop, then unfortunately that's, in harsh terms, tough shit. That's the way markets work. So maybe if you're trading things like the dollar and other assets that can be affected by Mr. Trump or a news story, then maybe just reduce your position sizes a little bit, take your risk down so it doesn't hurt you too much. But as I say, this is what we're going to be in for. Okay, if you know what's coming, then you have a better chance of dealing with it. But I don't want to be hearing in a month, 6 months time, oh, I don't know how to trade all these Trump headlines and denials and whatnot. Okay, you know what's coming. Get ready for it. Right, moving on. Well, there's not much more to move on to. There's no real other headlines out and about. that's of any real note. So we'll carry on looking at prices from this point. Now I want to talk about the dollar overall, and we are seeing a bit of movement in the buck. Pairs like the euro, just now the euro getting up towards yesterday's highs, just another move up. But where you want to be looking right now, and particularly the early part of this week, is, well, any time you need to keep an eye on it, but particularly this part of the year, the early part of the year, is keep an eye on US yields. Okay, we've got a bit of a potential breakout situation going on. Okay, we've already had a big move. We already had a big breakout in tens above 4.5%. That's been holding. We're now looking to get another potential breakout up here. Now, when you're looking at yields, you've got to look across the curve, you know, just to give yourself a broad swathe of what's going on. In the shorter end, 2 years, we're sitting pretty much in the range of where the Fed funds rate is. Okay, so there's not much expectation showing in the shorter end in terms of where the federal funds rate, where interest rates are going to go. The market is sitting pretty that perhaps the Fed is heading towards a pause. So at least in the very short term, rates aren't going to do an awful lot. Yeah, maybe they cut a bit and pause a bit, or, you know, slow and steady. You know, no one's expecting them to cut 3 times in the first quarter of 2025. Okay, so the short end isn't really moving. The further out you go, that's where you're getting the movement. 10 years is probably, if you you don't need to know much about bonds and what's going on, but 10 years is probably your biggest go-to to see what's likely to happen in the dollar. While these yields remain high, and if they continue to push higher, that's going to be supportive of the dollar. Okay, so don't be thinking the dollar's going to fall out of bed if and while yields are doing this. If you go out a bit further, 20 years, you can see similar pattern, but we're breaking up. Okay, let's just go into a bit of a wider one just to get a bit of history. So we're pushing up. The last time we were up here was early part of last year, and we're having another little breakup, again supportive of the dollar. We've got a level up towards the 490s, up towards the 5% mark, 502s. That's going to be 5% is going to be a big area as well, because it's going to probably start attracting a lot more investment coming in, because 5% yield in the US, you know, that's good money, even while the Fed still want rates down. Okay, so it's going to become enticing for investors to start parking up again in the US. Okay, and if you're foreign investors, you want to be buying US bonds, then you're going to be buying dollars to do so. So that means further dollar strength. 30-year, again, that's breaking out. Similar patterns where we had this move, a little bit of stalling, and then we're off to the races again. Okay, so if you're trading dollar assets, don't be expecting euro dollar to be shooting all the way up to 108 unless something happens on the European side. Okay, so these yields are going to remain supportive of the dollar. It doesn't mean that every move up in yields means the same move up in the dollar. It just means that the dollar will remain supported. So it's going to be difficult for pairs like euro dollar to keep climbing higher. Now, it doesn't mean we can't go on and move up to 105, maybe even 106s, but, you know, you're probably going to find a lot of sellers coming in at these levels. But taking the pure text and sticking with euro dollar, we're up towards these highs. Can't even quite tap the high from yesterday, which could be significant for the rest of the day. Other than that, been banging on about it even before the new year. 104.50 is your number here. That's your first step to get back above if we're washing out this year-end, new year stuff going on here. Okay, so back above this zone is the first positive action. I want to see it holding 104. Now, we didn't do it yesterday, although we didn't dip too far, but if we see it holding this time, if we dip from here, hold 104, I think that might give it the springboard to take it through that 104.50. Get through there, then we slam straight into this big old zone, big historical area that we spent weeks and weeks and weeks pissing around before making a decision. So slam into there. This is probably going to be as tough as the 106s. So this is just a small hurdle here, getting over 104.50, but it's a pretty significant one nonetheless. But again, I'm not expecting this, even if it breaks up here, to be going all the way back up to 109, unless yields start topping out in the US and the dollar starts, heading much lower. But if you want to be long, then look for 104 to hold in the interim. Get that today, as I say, then we're probably going to go and at least have a test, potentially break out through that 104.50. Cable's looking interesting as well. Similar picture to a lot of these dollar pairs. So let's have a look at the old, where should we go? Let's have a look at the old daily. Yeah, I was looking at that one. So what's interesting about this one today, Cable, is that we got back above 125 yesterday, and we've opened today above it. Okay, so this again is just these three candles here is just looking like, New Year stuff. We had a big dip, we've got that back pretty quickly, and now we're back to where we were before. Okay, this support area just coming in around the 125. So the fact that we've opened up here today is a potentially bullish move. We're knocking up through this next small level. 126, 26.15 is going to be the next main level for me. It's your 104.50 in euro dollar. Okay, not a huge level, but a level that we need to get back over if it wants to undo this. Now, nothing in this trend is changing just yet. So this is still very bearish. Even from this December phase, it's still very bearish. If we get up to 126 and can't get through it, then it keeps all these moves in play, and then maybe we're going back down. Now, if we test that and come back down, or even if we just come back down from here, I think this 124.50 is going to be very important. Okay, if we get another move down there and it holds there, that's going to be a step up off this low. That potentially breaks the lower lows that we've got here. Okay, gives it a bit of a stepping stone to then move back higher. If you get that sort of move, I mean, I'm keeping an eye on this one. If we get a test down here for a potential long, if we get down here, test that and hold it, then we're probably going to go back up, maybe then go through the 126. But if we fail to go through there, if we go through 124.50, then this trend is going to continue. We're probably going to have a look down at the lows. We may even pull up at 124 before bouncing again. Okay, as long as we don't get down to these lows, then that's going to be a potential sign of a bit of a bottom in play, and then maybe where we rally to, who knows? It could just be a simple move like this. We get a low, the next low doesn't quite get there, then you get a decent rally. Okay, but it doesn't mean the trend is breaking. So we could go to 24.5, 24, bounce up to 26, maybe even 27 again. Okay, if we get there but don't get through there, there's every chance we can come back all the way back down again, and then we go through the lows. So depending on your time frame, depending on your time scale, there are reasons why you could go long even in this downtrend. But until this downtrend breaks, be ready to take profit if you get rallies and you're long. Okay, and if you're short, you know the areas that the price needs to hold to keep this trend going. Okay, so you don't need a bias for anything here. You don't need to think, yeah, I'm only a pound bull when it's going to 130. Doesn't matter. You can trade this long and short just off the levels that are in play. There's plenty of them, and they're pretty clear. Moving on to the Aussie, which is trying to have a go at this zone. And I've been highlighting this zone for quite some time. It was the potential for being a decent support area. It broke. Now we're trying to get back above it. We're struggling. We had a little poke yesterday. We're struggling again today, just edging above it. If you get above this area, 62, 85, 90, maybe you want to factor in the big figure 63. If we get above there and it starts holding a support, again, that gives it a base to then push on up. As you can see, though, this is still a very, very strong trend. So if we do push up, we're going to get some stuff around 63, 30, 40, but this 63, 50, 70 area, former support area, is going to be important again. So through this level, get up to here, can't get through, then there's every chance that we come back down again, and then we see what it does at this zone. If it carves through the zone, then maybe we're heading all the way back to the lows. This low, though, was pretty important, marked close to that low. So this is really your level. Back through here, then it's pretty open sky, or rather trapdoor all the way down, maybe to the 60 big figure. Okay, so it's an important range we've got here at the moment, and this is what you want to be looking at. Back above here, a bit of relief, but again, nothing changes until we get to at least the 38.2% of this move, and that's up near 65. So a long, long way away. So yeah, while this may have held, doesn't mean we're breaking this trend or even close to breaking this trend. But you can still make money just taking out the small hurdles in the meantime. You know, it's a good 70, 80 pips up to there, which is decent money if you want to take it. But be mindful if we don't get through there. Right, come on, boys and girls, don't keep me talking. I want to see some questions and some things you want to look at in the old chat, so throw it in there for me. Dollar China, which I got fortunate yesterday, taking a short above 135s, and managed again, took profit on those Trump headlines that move down, that saw the dollar get sold off this move here. So I was slicing and dicing all the way down, because it started going my way pretty quickly after I got in the trade. So first trade in the new year, I want to take some money off the table as quick as possible. Decent hold 735s today. It's only a minor hold. I'm not going to call it anything significant, but this is pretty decent historical level up at 735. Overall, it's keeping, tech-wise, it's keeping these highs. It's showing how strong these highs are. And that's all I want to see being short at the moment. That's the main reason for the short yesterday, that third time we held these highs. So there's every chance that we do see a bit of a pullback. The forces are still against the one. Okay, so I'm still fighting a very, very strong trend here, particularly that move up from below sevens. Very, very strong move. And we know that everything's lined up against China still. So there's every chance that this one weakens. So I am now considering flipping the short if we break up through 738 and grabbing along. Because if we break up here, we're probably going to be running up to 740s at the least. So I'm going to try and catch it the other way if we do break up. But in the meanwhile, the level's holding. I'm happy to stay in the trade. I want to see it under 731s. Then we'll see how we do when we get down to the big old 728s. Now, if you are trading this one, you have to be aware that you even though you have to put a line in, okay, you have to give them a little bit of room. You know, 731 might be 730 to 732, something like that. So you can't just rely on one number like 728 here. You know, you get all these little moves above and these little pings and whatever. Okay, so you can't trade this like you would euro dollar and have and take it down to individual pips. You just got to give it a little bit of room on these. But if we break under 731s, I'm going to be slicing and dicing a bit more. Maybe start pulling my stops down, because I don't think we're done yet with this trend. Right, here we go. Angela, Kiwi dollar, Aussie Kiwi. Let's look at Kiwi dollar. Similar story, but the bounce off of this level is still looking pretty weak. It's a decent amount, you know, 80, 90, nearly 100 pips up off this low. The big area was this around here, around the 58, 40, 70 area. Okay, again, big historical levels, you know, that go back quite a way. If I can find it, you get the picture. Let's see if it's in a weekly, if it doesn't look too messy. So this 58, 20s area goes back. You'd have to zoom into these areas to see what I mean, but that was a big old area. So this is a bit like that zone in Aussie dollar that I was showing you about, but it's much higher up. Okay, so We've got a lot of bits and pieces in the way. That former low there, which didn't really do much on the way down, but it could do something on the way up. Let's just chuck a line on it, just for the sake of it. Catch it right. Oh, come on. And about there. Let's get that kind of in there. So around about 57.70. Keep an eye on a bounce back up to there. Otherwise, it is a bit of empty space down here. Okay. Yeah, you can pick some levels off of some of these former points along here, but they're all pretty minor. Unless we're back up here at this zone, then again, this is still a very, very bearish phase to look at. The fact that we held here is pretty important, but if we can't bounce too high, then there's every chance that this level breaks. And again, we've got some big deep holes under here. If we get under some of these two lows, under these two, you know, we could be heading down to the 50s or even more. So there's nothing bullish about the longer term picture in this whatsoever, unless we see multiple holds down here against this level 50, what is it, the 55.80, 56. If we continue to hold there, that'll give long something to lean against, try longs off. But the more we test this level and hold it, the greater the chances the break being quite volatile if it happens. So if you're short, you want to be careful. If we're moving up, this would probably be my perfect area for getting back into shorts if we see it, or maybe going on a break trade, 55.80s, 55.70s, something like that, to try and catch the move down. Xiao, dollar CAD. So we had this break. I was talking about this little short-term range that we had. Trade in between it or trade the breaks. So if you traded the break here, you got a few pips out of it. We have, give or take, a bit of noise here. We have held it. Okay, so I want to see if this continues to resist that 43.40s area. If it does, then we're going to be heading down, or may even be heading down anyway, down towards this next level down here, 42.65. That was a bit of an old level. That's one that, again, one of those historical ones that goes way, way back to that point there. Okay, that's why it's been on my chart for a while. Okay, didn't do an awful lot on the way up as much as I expected, but we did have some big news that drove it up through there. So we had a little bit of a hold. Oh, we had a little bit of a hold before it broke, but straight after it held as support. So it does show you how important this number will be. So that's the level you're going to be looking at if you're short. Well done, but that's the place that you need to get through. Or maybe we develop another range between that area and that area there. But if we go down, test there and hold it, watch what happens when we get back to there. If we hold that, then that keeps the downside pressure in play. So let us know what you're doing, Zhao. You're long, you're short, you're looking to get in, out. What you doing, mate? Sam, Euro CAD. Let me see. Wonder if it's at 146.5. No, it's not. So Euro CAD, we've had all this stuff with Trudeau going on, but I don't think the market is paying too much attention to it. We're going to get another leader. There's going to be elections. We know what's coming. There's a bit of time in this one before we really need to get concerned about it in terms of the election. Is it going to be a clean sweep? Is there going to be a new party coming in, taking over? Is it going to be a hung parliament? All that sort of palaver. If that's not to October, the market's not going to pay too much attention to it. So as far as this one goes, we're a bit in the middle of the late December range and the New Year stuff that's gone on. So for me, it's a bit indecisive what's going on here. I probably need to do a bit of tidying up on my charts anyway, because I've got some fibs here that are probably not matching properly. I would move that up there. I don't like moving fibs like this because this is just a bit noisy. But let's just do it anyway, just to make a bit of clarity. I'm not overly keen on it, but that's what I'm going to do. 151s, had that level in. It was a prior high. It goes back a bit as well to all these levels here. So a significant level, but we have been breaking above it. So that probably make it a bit of an area. 151s up to 151.65, quite a wide zone, but you know, these tops need to be respected because they're protecting that prior high up there. For the downside, just coming in a little bit. This 148 figure, it's been a bit messy. It's a bit of a pivot point. Okay, if we, well, it's actually just, it's been a bit messy. That's all I can say about that. So I'm not sure about it as a level. I'll probably more focus on the low that we've got down here. But as I say, when we've been away from a level for a while and we come back down, it might start doing something. So use this as a bit of a pivot point. If we're holding it, that's your cue for longs. If we're breaking below it and holding below, that's your cue for shorts. But really here, it's just a bit in the middle. You're hoping it will fill the lower gap. What gap? What, this one here? This gap there? If that's the gap you're talking about. Yeah. I don't know, mate. I'm not one for trading gaps. I mean, this is what? 45.60. It's a 30 pip gap. Okay. Are you going to be trading what's going on up here just in case it closes down here? Trade what's happening here, mate. Don't worry about the gaps. Okay. If you want to be short for a gap close, you still need to be trading off the levels. You know, we've got a level up here, just in the short term, as I said, probably right in there, 150.5. Okay, and we've got the level into 148s. So if you want to be short, trade what's going on up here. Okay, not what might happen down here. You know, you're 300 pips away, 400 pips away. Okay, if it closes, great. But, you know, I'm not trying to tell you how to trade, mate, but, yeah, I'm not one for gaps, particularly when they're 400 pips away. If it's going to close, it's going to close because of some other reason other than it's a gap and it needs closing. Okay, so just trade what's going on here. There's enough space here to trade stuff and position. And if you get the gap closed, then you're on the right side and it's happening for some other reason. So, keep an eye on that. What else? Stocks. Well, let's have a look at gold quickly. Otherwise, I'll get told off if Reg is in the house if I don't look at gold. I thought we might have seen a bit of more of a lift on the China headline. They're back into gold because that has always been a bit of a springboard for buyers to come in if they know they've got some backing from China. So the fact gold hasn't really moved higher on the back of those headlines suggests that, you know, maybe the market is now a bit more balanced in what it's trading. Certainly, you know, since we had this big long move, this is probably, let's go a bit wider again. Let's have a look at the daily. It might be a bit messy. Let's get rid of that crap. So we've had this big trend, and this is looking to grow into maybe another bit of sideways action that we got here. Okay. The only difference in pattern with this is that we made a high and we kept just a little bit of an uptrend going in this. The lows couldn't get as far as this low here. So had a high, then we had a higher high. We had a dip. Dip got bought. We couldn't quite get down to that dip, and then we went on again. This one's looking a bit more balanced. As I say, we've had a high, we've had a dip, and we haven't even come back close to the high, and we're finding resistance well below that high. It doesn't mean it's not heading higher. It just means I think it's going to need some extra oomph, you know, because it's lacking what we saw previously, where you had these holds and then breaks, holds and breaks, holds and breaks. We're now still going sideways. Okay, and I think that's going to be the play going forward from now. It doesn't look like it wants to go on and take on those highs. Doesn't mean it's going to collapse, as I say, but, you know, we've got a decent range here up towards that 28s and down into the 25s. Okay, so there's a wider range that you might want to consider. Inside that, we've got this area. We can't get below and hold below 26s. Okay, wider, we can't get above and hold 27s. And then you've got some bits and pieces in between, some other range points and whatever that we're holding. So there's enough in here for short-termers to play between the goalposts, as we like to say, you know, up towards this 26, 60, 70 area. We can't get through there. This is still a decent point. We've tried. We have these little moves above, can't get through. Then when we get through, we hold, we hold, we hold. Again, this is one that it's not tying itself down to, you know, an individual price, one level. You know, I've got my line in 26.70, but then you get, you know, 26.76, or you get 26.63 or 26.65s, you know. So it's a bit of an area. So it's hard to you know, you wouldn't put a stop bang on that number there. You'd have to give it a bit of room. But yeah, let it develop a bit here. But I think we're in for a bit of range play. You've got the big range, as I said, 28s, 25s, and then you've got enough levels in between here that you can mess about with. But as I say, I would have thought coming in and seeing that China headline that gold might at least be up testing this area, just on the back of people jumping on the bandwagon. But, so that we're not is a bit of caution if you want to be long in this one. No problem, Derej. Doji on the 4 hour, Angela, all yours. I'm not one for those sort of candle patterns myself, but you can go ahead and trade it. Let's have a look. Doji on the 4 hour. There you go. There's your doji. Have fun with it. Gavin, 58.65 in gold. Bit of a zone. 58.65. Yeah, I can see that. Just some of these areas up here. Yeah. You can pick your own zones. You know, everyone's got a chart. Everyone's got lines. You can pick your own areas. We've got a little bit of a level here, 26.45. It's just a, you know, bit of a pivot point. I'll just make an example. Take that off. Grab that one. So right here at the moment. Oh, why does it keep coming up? That colour. So you can see we get a lot. We've had a lot of middling action around here. Sometimes it's support, resistance, you know. So you can find your own levels. What you do with it is up to you. You know, these are probably scalping levels more than you know, sitting in for a few days or something like that. But you know, everyone can find their own levels. Look for the ones that are more stronger. You know, I've done the exercise all the way through this, just picking the points where we might get support and resistance coming in. I could probably do with cleaning up this chart a bit, because a lot of these are just short-term levels. If you remember that we were doing as a price is moving, because when you've got an asset that's moving up and there's no prior price history, all you can do is just build the levels as it goes. So I've got a lot of short-term stuff in here. Hence why it looks like a bit of a mess. So yeah, it might not be a bad idea to do a bit of spring cleaning on the old charts. Right, anything else? Silver. Let's have a look at the old silver. Yeah, that's staging a half decent bounce. Silver's a weird one. I don't have the same insight in this as a lot of others have, like Stel and K. You know, decent double bottom down there. That's what you want to see. That's the sort of thing that I've been trying to show with something like euro dollar. Okay, sorry to jump back into another asset. So if you imagine that's again, just for example, if that's the 104.50 in euro dollar, okay, you've had the low, you held the low, okay, can't get through there. When you get a secondary low, that gives it the springboard, okay, and that's exactly what's happened here. You've had a low, it's held the low, it's then gone on and busted the short-term level. Where it goes from here, well, that's anyone's guess. It's still in a bit of a downtrend, okay, so that can't be ignored. And again, it's had two phases. It's had, again, a double bottom and a bounce. And then when it's run into resistance, it's had a couple of goes at getting through resistance. Hasn't happened. And then you get the drop back, and then it clears out those lows. Okay, so these little signals, okay, that's what you want to look for. Okay. because you get a low, you get some time, and then it confirms a low. Okay, that's your signal to go long. The same up here is your signal. If you're long down here, okay, you may have been slicing and dicing, maybe leaning just against these prior highs here. You think, get up there, I'm going to take some profit. Then you find it goes, comes back. You have another test, it holds. If you've been long from down here, that's where you've got to be thinking, I need to take a bit more off the trade and tighten my stops up on that trade there in case you get that move that then keeps on going. So it's a similar thing down here. If you haven't bought here, okay, and you want to be long, then you need to look at what happens if we come back down here. Yeah, it still might be valid to test along here, but you don't need to do it with a big stop, okay? Because if you're, 20, 30 cents under this low, then you might be seeing something like this and you're heading down here somewhere. Okay, so if you want to be long, look at this area here, 29.90. Okay, resistance, 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 break, and a little bit, it's just coming before, and a little bit of support just in there. So that's your cue to be long. But again, you don't want to do that with a wide stop. Okay, you don't want a $2 stop on that. 20, 30, 40 cents, maybe just below that low. That's where your stop should be, because if you're breaking back down there, then you're wrong and you're heading down here again. But from here, the upside, yeah, getting up to 30.5 has been a bit of a level, maybe up to that 30.80s area. But still, this trend is in play. So if we can't get back up to those highs, if we make a high, somewhere around there, 31.45, again, we've had prior action there. Hit that on the head. That might be as far as it's going. And then this trend might continue and we're heading all the way back down there again. As for the China effect, yeah, I don't know I'm not up on what China's doing with silver. Obviously, they're in lots of metals, rare earths, and all the rest of it. So, yeah, not sure what's going on there. But, yeah, Peter, I know you put that question to only hosts and panelists, so just to me. So let us know what you're doing in that yourself, Peter. What are your thoughts? You think it's going up? Think it's going down? Let us know. Right. I think that's it for today. Cool. I've managed to talk all the way through to nearly 20 past. Look at that. Good stuff. Right. What have we got coming up today? We've got the ISM services to keep an eye on. Yeah, ISM services number coming up. Keep an eye on that. Because we're getting this in NFP week, keep an eye on that employment number. We saw a bit of a wet one from the manufacturing number yesterday. If we get a dodgy one in this one, that will put a bit of pressure on NFP expectations. Then after that, we get, or at the same time, we get JOLTS, which is a bit lagging. That's November data. But again, at one point we were looking negative, running up above 8 million. Now we're back under 8 million, and potentially heading lower. So keep an eye on that. If we get a weak number, okay, then that's going to be, again, playing into NFP expectations. Right, I'm going to call that a day. Thank you very much, everybody, for coming to the Flow Show. Have a great day, everybody. Stay safe, watch those headlines, and we'll catch up with you tomorrow. Have a good one.